Hey, good evening. What's up? This is Brian Kuzma with Commercial Rare Coins and Precious Metals and metals in beautiful Lauderdale by the Sea. Really sorry about the late report today. We had to take a couple days off and got a little late start getting back here today. I did catch a couple fish. Went up Melbourne, about 2 hours north of here. The weather was a lot cooler and the waves were a hell of a lot bigger than this. But no less, had a great time. Anyway, sorry about this report. Going to keep it real short and sweet. And as they say, better late than never. So here I am. And actually, I had a chance to read this article when I was sitting in the chair watching the surf come in this morning. And not this one particularly, but I just pulled this one up. Powell slams Bitcoin. That kind of explains the day. Powell slams Bitcoin, says crypto more a substitute for gold than dollar. Hey, Mr. Powell, you know what you can do? You can GFY. So I'm sorry. I mean that with all due respect, sir. But if it wasn't for you, the system wouldn't be screwed up. And you're not one to be talking about dissing anything, crypto or gold for whatsoever. The way you guys have handled the dollar, forget about it. That's just my opinion. I'm not even going to read the article here because we know how brilliant these guys are. Let's take a look at this article I was talking about. It was done by Gold Switzerland, and Matthew, is it Piepenberg, knocks another one out of the park. A great article here. I'm going to kind of go over a few things here, what he's talking about. And I'll start out with the headline here. We certainly live in interesting times, yet be bull or bear, left or right, optimist or cynic or pessimist, one would be hard-pressed to pretend that everything, I'm sorry about that, dropped the microphone, everything is normal. The controversial insane. Many are questioning why a virus with a death rate of less than 4% has shut down the global economy for a year and counting, despite extremely legitimate moments of silence for those who died. Others are questioning policymakers who ignored protecting the most at-risk profiles. I'm going to skip over this because most of us know this. As millions of Americans awaited this check from Uncle Sam to the tune of $1,400, some are wondering why SEC sanctioned liars and tweet-happy frontrunners like Elon Musk and other C-suite tech giants are amassing fortunes. Incidentally, the $1,400 check that most Americans are getting is a quarter of the cost of the dress worn by Meghan Markle in her recent attempt to convince Oprah and the rest of the world to sympathize with her unique struggles, while more than 50% of U.S. children are living in welfare-assisted homes. Again, is this normal? It certainly is interesting. And what a great way to start off an article. I'm going to kind of just go over a couple key points here, but I do recommend you read this. It's done by Matthew Piepenberg, and he's with Gold Switzerland, Matterhorn Asset Management. And again, I don't know what they do, but they write great articles, and even if they sell physical gold, I will beat their prices for physical, but I'm not quite sure what that is. What they do. They may just sell paper assets, but here nor there, they write some really good stuff, and I got to give them a lot of creds for it. I'm on the same exact page, or I should say we're on the same page. The openly insane, I'm going to kind of blow this up a little bit. What is less open for debate, however, is the otherwise obvious yet media-ignored disaster otherwise known as a global financial system and the distortions that govern them, as evidenced, for example, in the comical CPI measurement of inflation. And again, if you've been watching the show that I'm doing here, the video that I do every day for the last year almost, we've talked about this many times, that the CPI is just comical, the things that they measure. They certainly aren't measuring real inflation. So what we've got out there is we've had inflation for quite some time, but the figures they use, they just doctor the stuff. The very fact that the market reached all-time highs while global economies, GDP and unemployment rates and social conditions reach new lows in the backdrop of a worldwide shutdown, for example, ought to have everyone, including those who know nothing about free market capital, scratching their heads. The death of free markets. Well, I could go into more of this. I mean, gosh, it's a great article, and I didn't realize how long it is. He talks about the paper markets, worthless paper, but paper as we know it is just ordinary flimsy thing. Paper is also where we get to hold and touch fiat currencies, which is, like most paper products, are not terribly valuable. As Voltaire famously said, all paper money eventually turns to its intrinsic value of zero. And this is exactly true of ETFs, GLD, SLV, in my opinion. COMEX market, the London markets, they're paper markets, they're full of shit, they're leveraged 100 to 1 to 300 to 1. When the shit goes down and people that are sitting on those type of investments really find out what they own, which is basically nothing. They own no gold, they just own a fake piece of paper. It's a Ponzi scheme, folks. I'm sorry, but it's true. Central banks and broke nations therefore need to make otherwise weak paper appear valuable, and will do all kinds of complex market gymnastics to keep that illusion that paper is actual wealth. Wow. Heavy statement there, absolutely true, and that's exactly what we're seeing with the central banks and the Fed. They're doing everything they can to keep the appearance that things are normal. Towards this end, it is therefore very, very important for those powerful players to make the true stores of wealth, i.e. gold and silver, look far less valuable than what the natural market would otherwise indicate. Now, for all you gold and silver bugs and stackers out there, you know this for a fact. You're wondering, you're looking, scratching your head, well, I can't find metal anywhere, but the paper price indicates that it's really cheap and it should be readily available and abundant. But that's not true, folks. There's the illusion that there's like tens of billions of ounces out there that don't really exist. They just exist in paper. That's kind of what you're looking at right there. And we look at that every day and we kind of worry about that. But it's a bullshit paper market, as we've said. In short, key market manipulators described below like to use paper products to make gold and silver products look sexy. For if gold and silver were to be priced according to the genuine supply and demand forces, then the entire and embarrassingly broken paper scheme of a global fiat currency and markets would fail like a house of cheap paper cards. Man, I love the way these guys write. They write like I talk. Hard to believe? Let me show you. Gold and silver's fictional paper price. Man, you guys got to read this. I'm going to put this on your homework for sure today. You have to read this article. I don't say you have to read it, but I highly recommend that you read it. And here they go into like ETFs, gold's fictional paper price. Take my two favorite, misunderstood yet historically confirmed stores of genuine rather than paper or even crypto value, gold and silver. Popular demand for these assets is in fact massive, which means their price power should be openly and equally so. After all, true free market capitalism rewards those assets which enjoy high demand but relatively low supply, right? That's Economics 101, and we've talked about Economics 101 for a long time. Let's look at the rising demand of ETF flow as well. Oh, gosh, I could go in. This is really long-winded, and I don't want to go too much into it. Otherwise, we're going to be here for about 40 minutes. How the Hateful Eight, again, I'm going to skip that area right there that's talking about ETFs and how it's done through the ETFs and how ETFs are full of crap. I'm going to go over here, how the Hateful Eight kills free market price discovery. The Hateful Eight, that's kind of an interesting new concept to me. And to make this obvious, objective and undeniable as opposed to those theoretical or dramatic, let's see how the big players, rather than the natural supply and demand forces, artificially and legally and yet dishonestly fix the gold and silver prices, and thus mock any vestige of respect for that bygone ghost, otherwise known as a free market price action. I just love the writing of this. Even without any talking about the technical stuff, you kind of get exactly what's happening here. Let me kind of skip down here, and again, I don't have the whole article memorized, but a few key parts. Believe it or not, nearly every contract, I'm talking about thousands of them, for gold and silver in the COMEX futures market trade net long. I didn't really understand that completely, but meaning they are buyers. That should make their prices quite high. Yet all it takes to defeat the demand, power, and rising price of those contracts in metals is just 4 to 8 of the largest traders, mostly bullion banks, in the futures market to perpetually short, bet against those other contracts to keep the prices suppressed. Hard to believe, see for yourself. Well, you can go into the details right there. And first thing people are going to say is JP. Oh, JP's in it. But you know what? I've been saying this for a while. JP's out of their short position. They got out of it. They're loading up on metals right now. They are the smart vampire squids out there. That's for sure. But JP's got they're in a long position right now, actually with physical. I think they set themselves up for this. And you got to give them credit for that if they did. However, there are some big short positions out there, including the bullion banks, COMEX, London. The ETFs certainly don't own the metal that they may think they do, if they really believe that they do own metal rather than paper. And let's move along here. How long can natural price forces be repressed? Let's see, how long can this scam manipulation continue? And that's a question that we've all asked. And the problem is and I've said it many times in the past, Peter Schiff kind of got in trouble with CNBC and a lot of news stations for quoting a time that he thought the market was going to crash this year. Never quote times, because you can never underestimate the people that print money, like the Fed and central banks. They print money. They have the money machines. So it's very easy to underestimate what they can do until it comes to the point where they can't do it anymore. And that's what we're going to see eventually here. So how long can this scam and manipulation continue? That is, if 4 to 8 big boys are colluding to the tunes of billions and billions and billions of dollars in short contracts on comics, how long can this game continue without a wrench in their plan? The key to the survival, and I like, again, these guys write it up really nice. You should read this, kind of commit it to memory, and you'll feel very comfortable with buying the dips, and that we are definitely in a bull market. Key to the survival of the bull, this open scam and price suppression in place since 1973 is to keep the short contracts on these precious metals perpetually rolling over. So, for example, a COMEX contract, and they've done this for years. You know, if you have a COMEX contract, you basically own 5,000 ounces of silver. And they make it really cheap for you to roll that contract over each time rather than ask for the physical delivery. Because physical is kind of heavy. You got to pay for shipping or whatever. You got to store the stuff. Now all of a sudden, so shipping is, a lot of people say, well, why would I want to ship the metal? Well, the problem with this is that you really don't own any metal until you actually ask for it. You may think you do. This is why they keep rolling over the contracts like they do. And they lowered the price and they make it really cheap to roll over a contract purposely. To keep the short contracts on these precious metals perpetually rolling over rather than expiring, and if the contracts were to ever expire, an actual physical delivery of the underlying metals would be required. But that would immediately spell party over for the Hateful Eight and COMEX itself. That's because these same big boys would default on actual delivery for the simple reason that they don't actually own enough gold and silver to honor their levered contracts. Not even close. Bingo! We've been talking about this for a long time. You just wait till everyone starts buying physical gold and silver and everyone starts talking about it and the general public kind of catches wind of it and starts catching, if we just get 1 or 2% of the general investing public out there buying physical instead of contracts, ETFs and that kind of thing, gold and silver prices, it'll put these guys out of business. They'll probably get bailed out by somebody. Remember the people that have the printing press. But anyways, I digress. And they're talking about, let's see here, so not even close. That is why the current spot price in the COMEX for rolling over rather than delivering these contracts in gold and silver is so cheap. In fact, almost free. And I just talked about that is because they want you to roll these things over. They don't want you to ask for a delivery, and they make it cheap and easy for you to do that. In simple terms, these market manipulators or the COMEX itself wouldn't survive without such manipulation of perpetual contract rollovers. Absolutely true. Again, I can go into this even further. Enter J.P. Morgan, no honor amongst thieves. When J.P. inherited their post-08 books off the other headlines failure, Bear Stearns, this included 30 to 40,000 short contract positions in gold and silver. People are still talking about this today, even on at short squeeze, and a lot of people don't know what they're talking about. JP is out of their short positions. They've been out of their short position for a while. This is known news. There's facts and data to back this stuff up. Basically, they're in a long position right now, so that's a good thing, and we already talked about this. I'll go into a quickie here. Thus, after spoofing the market in 2020, remember they got fined like $1 billion, but they made $40 billion probably. Morgan artificially manipulated the prices down before going net long to cover their shorts last March. As of now, JP has closed its short position and is market neutral rather than net short. In fact, they are stacking. Get this, they are stacking their physical gold and silver bars in the London warehouse as they type this, controlling over 1 billion ounces of silver and 25 million ounces of gold. Well, JP is all set for this big bullion run, this big gold and silver run. They are sitting on physical because they know the paper markets are a sham. They're about over. And I think JP's is going to force the hands of COMEX and others too as well. So they're going to be one of the players out there. That's going to cause silver and gold to go up. But, for their own personal reasons, not for ours. But it that benefits us as well. So let me kind of move on to a few things. Oh, God, I'm at the end of the article. Hey, listen, you have to read this, and I got to eat soon because I haven't eaten dinner yet, but it makes sense of comics and sanity. It's done by Matthew Pippenberg, and man, what a great article these guys write at Gold Switzerland. I'm kind of on the same level as they are. They're the same level as me. Again, they write like I talk, but definitely something you need to read and commit to memory. Don't mind showing you competitors or potential competitors' websites either, because like I said, I can beat their prices. But, you know, if you're in Switzerland or wherever these guys are and you need their services, gosh, I wouldn't, they write some good stuff, like I said. Well, let's move into precious metals prices right here. My phone is still ringing after hours. CCE spot data. I like CCE. It's a subscription service only. However, they've been around for like 100 years and they're well respected in the industry. Market is open still. I'm going to do a quick refresh here and see what we got going on. 1738 down $6, but still steady as we go. We are at that sub 1700 for level. I'm cool with this right now. Again, steady as we go. Silver hanging on to that $25 level. Again, one day you're going to say $1,738. Gosh, that was cheap. Even with the $100 premium for gold bars at $1,838. I wish I had loaded up on them. Well, all the smart buyers have, and if you're new to this show, you're going to, or you have already. Again, buy the dips when you see dips, and there will be dips. Buy the dips when you can. Same thing with silver. Silver's holding on to this $25 level here. It looks like that our gold to silver ratio is kind of probably more balanced out. I'm betting, I didn't have the math right now, didn't get a chance to do the math, but I bet it's between 65 and 68 to 1 or something like that. Platinum got down 11, sub $1,200 again. Great buy. All of these metals are great buy. One day we're all going to look at these prices and say, God, I wish I bought that. Just like, I look at silver, and, when it was $5 an ounce and gold was $250 an ounce. I've been around that long. And, you're going to look at those days and go, that's just like history, man, And you're going to say the same thing about these prices one day as well. And again, don't panic, don't push it. If you plan on living for a little while and you don't plan on dying this year or the next year or the year after, you're going to do very well with this stuff, folks. And I think it's going to be a good hedge. Well, that's really about it. This is Brian Kuzmar. Sorry, better late than never about the show, but hopefully Marcelo can get this up and out really quickly. Thanks for watching. I'll get back to my normal hour tomorrow and try to get the show done in the morning. And again, we usually have it pumped out by afternoon when we're done with it. Hey, thanks for watching. This is Brian Kuzmar with Commercial Rare Coins and Precious Metals in beautiful Lauderdale by the Sea. Call me anytime at 954-493-8811 between the hours of 10 and 4, Mondays through Fridays. Happy to help you with your purchases. Hey, make sure you hit that like and subscribe button as well. It really helps me out. Lets me know who's watching and boost my ego just a little bit. Hey, have a great day. Talk to you soon.